What's up, guys? It's Anthony here, and today we're going to be going through the ways I got my credit score up as a college student. I know that it's hard. I know you guys got so much stuff going on. You got classes, you got extracurriculars, you guys got a life, but it is important to plan for your future. Just to be honest with you, credit score is super important to have if you want to build a life. You're going to need a good credit score if you want to get a house. You're going to need a good credit score if you want to get a car. For me, I started about a year ago and I was actually really late. I recommend that you guys start as early as you can. Right now, I'm a senior in college and I started building my credit score actively about a year ago. Okay, so the main thing that helped me was deferred student loans. Now, if you know, when you get to college and you don't have a full ride scholarship or you don't have parents that are going to be paying the tuition for you, you're going to have to get student loans. The good thing about student loans is that while you're in school, you actually don't have to pay them. Throughout that entire time, they are deferred. So on your credit score, it shows up as a loan that has been paid every single month. So when you go into your Credit Karma app and you check there, you can see all of these payments have been paid on time since they're deferred. That'll help you get some credit history. It'll help you actually build your credit because it's seen as an on-time payment. Now, after you finish college, you have to make the decision on whether you're going to start paying small over a longer period of time or if you're going to pay a larger sum right up front. That's up to you to make that decision, and it's always important that you guys are smart and thorough when you're actually picking these student loans. Another thing that helped my credit was Rent Track. What Rent Track does is it has an option for your credit to be improved every single time that you pay rent on time. So I wasn't living on campus when I was in college. I was living in a house that I had to pay rent every single month. So with Rent Track, every single time that I would pay my rent on time, they would send it to the credit bureaus and I would get an increase in my credit. So this was happening before I even knew that it was happening because it was my mom that set it up for me. It actually helped me build my credit a lot. I came out with a 650 credit score without ever having a credit card or anything. If you have the opportunity to use Rent Track to pay your rent, I think that it would be very, very good for you because you'll be able to pay your rent and build your credit at the same time. Another thing that I did, I got a Bank of America unsecured credit card. This is a cashback rewards credit card that you can get. The only reason I got the Bank of America one is because I already bank with them and I had a check-ins account already. The reason that I picked this one is because I had zero annual fees. For me, it was important to get something that I didn't have to keep paying fees on because I wasn't working. So since I wasn't working, it was important that I had something that could build my credit even when I'm not working. What I did is that I would put any bill that I would have every single month that I knew I had to pay on my credit card. So for example, what I did is I put my auto insurance, or if you have a phone bill, you can do it with your phone bill, but anything that's a small payment every single month and charge it to your credit card. So what I did is I put my car insurance, which was about $150 a month around there. I put it on my credit card and I ended up paying my credit card with the money that I would use to pay the car insurance in the first place. So what I ended up doing is that every single month I was paying off my credit card. I was building my credit with something that I already had to pay in the first place. You guys can do this with gas, or you can do it with the phone bill, or even your Netflix subscription. But pick something that's small, because another thing that's important is you want to have a low utilization. So what a low utilization rate is the percentage of your credit card limit that you actually use. For this credit card, I got approved for $1,000 limit. The reason that I got a $1,000 limit is because I already had a 650 credit score. So it was an average credit score. So they approved me for more. You might not get $1,000. You might get $500, but you want to stay within the 10 to 15% range. You really want to have as low as possible. But if you are planning to actually use it like a phone bill or a car note or car insurance, you want to have something that is from 10 to 15. That's why when I paid my car insurance, it was $150. That was about 15% of my $1,000 limit. So what you want to do is when you get your credit card, figure out what is your limit and then figure out what is a 10 to 15% of that limit, so you know how much a month you should be spending, because your credit is also built based upon how much you utilize your credit card. Lenders and banks don't want somebody that's going to be maxing out their credit cards all the time. That's a no-no. You don't ever want to be maxing out your credit card unless it's an emergency, but you shouldn't be doing that if you just want to build your credit. Now, another big thing is that you want to pay your bill on time. So when you get your credit card, you are going to have a due date. You want to make sure that you pay your entire bill before that due date. Now you can pay half and half if you want to do that. Just make sure that it's paid before the due date, because there's nothing that kills your credit faster than paying bills late and not paying on time. That's huge. That is super, super, super important if you want to build your credit. Make sure that you pay your credit card bill on time. Don't make any exceptions. It's super important for your growth. That's pretty much what I've mostly done. A few tips that I would give to you guys is to make sure that you're using your credit card on things that you would already buy. So say you don't have a monthly payment, just use it for things that you would already use cash on. So instead of paying for the item in cash, you pay it with your credit card and pay your credit card off with the same cash you were going to buy that item with. Credit is not bad. Having debt is not bad. It's the only way for you to build your financial history so that you guys can get approved for a good car payment. You can get approved for a good loan. Low interest on any of those things is what you're looking for. They're trying to find lenders that can be trusted and that have a history of being on time. If you guys enjoyed the video, make sure you guys smash that like button and subscribe to the channel. If you have any more suggestions on videos that you think I should do, make sure you put it in the comment section down below. I will see you guys in the next one. Peace.